Hello traders and welcome to another video review. Today is Monday, May 9th, 2022. Let's start with the Forex calendar. On the Monday morning, there isn't much movement on the financial market. We got some data published overnight, mostly from Japan, Treasury Industry Index, business expectation just a tad, 50.7 versus 50.5, PMI composite business expectations just a tad, 51.1 versus 50.9, so pretty much kind of a steady data from Japan. During the London session, we got on the trade balance from France and Centix investor confidence from the Eurozone. As you can see, the investor confidence might deteriorate from -18 to -21.7, which is kind of a significant. And then during the New York session, we got building permits and FOMC member speech, Rafael Bostic, 2:45, then another speech from the MPC member Michael Sanders at 3 o'clock, and then some minor data from the US. So pretty much steady beginning of the new trading week. Nevertheless, let's find out what is going on charts. So the technical part of our review will start with the US dollar to Japanese yen. US dollar to the Japanese yen daily time frame chart looks bullish. The market is continuing the uptrend. However, the recent move up had been made with a way lower momentum than the previous highs. So we got a new local high and a new swing high at 131.33, and both are keep going towards 132 targets. This is the technical, of course, resistance. The zone between 130 and 132 might be considered as a kind of a supply zone. However, this zone would be very old, so it might not be that much relevant like the newest one. Okay, so please take this into the consideration. The other thing is, of course, we have the bearish divergence between the price behavior and the momentum behavior. So even despite that fact, there's a multi-divergence on the daily time frame chart, which is kind of a important chart. Of course, the bears are still in charge of the market, and they are not really want to terminate the uptrend and start some kind of a deeper correction. As you can see, after some kind of a pullback, we break above the blue trend line, then we have a pullback, break above the blue trend line, then we have a pullback, break above the blue trend line. So this pattern is being a repetitive pattern over the daily time frame chart of the US dollar to Japanese yen pair. However, please notice the fact that despite the multi negative divergence on the daily time frame chart, the momentum is still above the level of 70, so it's still extremely overbought but strong. This is still a strong momentum to the upside, and this is mainly why this market keeps going up, because it's driven by the momentum. However, this momentum, despite the fact that it's deteriorating, as you can see here, is still a strong momentum. So as long as we don't have a clear market clue, market signal, market indication of some sort of the overbalance, like here, for example, this would be 3.13% of the pullback. This pullback would be like 1.86. Okay, so and this pullback from here to here is 2.10. Okay, so the biggest one is minus 3.13 pips, sorry, percent. So as long as we don't have a bigger pullback here, we cannot expect really the market to terminate the uptrend and then perform some kind of a corrective cycle. So the outlook is still bullish. However, please pay attention to 132 and to the other technical support levels, and to the corrective decline of 3.14%, because any bigger decline than this might be a clue that the uptrend is done and we are entering a corrective cycle. So that was the major pair of US dollar to Japanese yen. Let's now take a look at S&P 500 before the New York session starts. What is going on here? Well, as you can see, the S&P 500 is following our scenario very well. We got the 5-wave decline scenario here, and as far as I can see, we might put the wave 3 low here for now, and then wave 4 bounce here. So what we are missing is, of course, the wave 5 to the downside with the targets, as you can see here on the chart. Of course, the wave A low at 4,110. This is the low that must be protected by bulls, which is why we are bouncing from this lows. However, you can see very big bearish pressure, bounce, bearish pressure. So this bearish pressure is still visible on the chart, and it might be the main reason why the ABC correction from the upside, from the top, basically from the top of 4,819, will be continued for the longer period of time. So we got wave 1, wave 2, maybe this is the end of the wave 3. It looks like, okay, it looks like this is the end of the wave 3. Bounce in the wave 4. So right now our key level in order to keep our scenario intact is the low of the wave 1 at 4,368, because we cannot have the wave 4 and wave 1 overlaps until wave 5 is done. Okay, so now please keep an eye 4,368. As long as we are trading below this level, everything is fine. Today's open is around the level of 4,090, 4,089, so please consider the fact that we might have another down day on the S&P 500. So that was the major market. Outlook is still down. Targets are on the chart. Nothing new here. What is going on the euro dollar then? What is going on the major pair? The first thing we can see on the daily time frame chart of the euro dollar is the clear rejection of the lower channel line. Okay, and then the clear rejection of 1.0639. This is the technical resistance, bearish kind of engulfing, and we are going lower. We got the spin bar here, and then for now we got inside bar as the day just started. The technical support at 1.0472 is still the main technical support for this market, but if we just move higher, we can see that the target for the bears is at 1.0343. This is the target for the euro dollar bears, and they can push this market lower even this week, especially because the momentum helps the bears. The bears are still in control of the market. Sentiment is negative, 34 points only. So please consider the fact that the euro dollar might continue lower this week. And last but not least, Bitcoin. Very sharp reversal first, and then of course continuation to the downside below the low of the end of the February at 34,290. So this technical support is now done. We need to remove kind of lines because there is too many technical resistance and support levels. We will gonna leave this two. However, we will get rid of this one, and the market doesn't respect this one, and the other one is being plotted on the highs of the recent rejection zone. So this is our main supply zone. It's still our main supply zone. This is our high, Yep, the recent high, and now this low is done. Now the major low at 32,905 is under pressure, and as you can see, we are going lower with the momentum. However, we are touching the 30-point level, which means the market is extremely oversold right now. So please consider the fact that after we touch 32,905, we might see some sort of the relief rally to the upside or short squeeze. So please be aware of the fact that we might not break below this level in one big push. However, it is still, of course, possible. And the last thing is that this decline looks very much impulsive, which is even worse for bulls, because it means that this wave might be continued lower below 32,902 with the target of 30,196, which is the next demand zone, the big key demand zone for the Bitcoin market. So this is my analysis for today. Thank you very much for watching it, and I hope I see you guys next time. So take care and bye bye.